What is up, everyone? So the mentorship continues. We are on week 8, and we're going to talk about high traffic times. Just a recap, we talked about how the market moves, key areas, where to find them, and all that. Now we're going to pair that up with these high traffic times, and this should, again, increase your probability of a win. See, what we're doing in this mentorship is collecting all these pieces, and when they work together, that's when the probability of you winning a trade goes up. And that's all we're trying to do is increase our odds. Just like in gambling, you can't win 100% of the time, but you want to make sure that it's tipped in your favor where you come out profitable in the long run. So let's dive into the high traffic times. So why wait? Well, it keeps us out of the market when most of the time it's slow, or usually something happens where it takes liquidity and then it goes in the way we want, right? That happened to me a lot. I would get stopped out, and then ultimately just the price runs in where I thought it was going to go, right? And that gives us a bigger increase of bigger moves because we're in the markets and trading when the volume and everything is at the most. There's the most players and news and everything. So that's likely to give us a nice run. And it's going to also increase chances of a more predictable move because in these certain time zones, we know it's going to do this, this, or this, right? Like we have areas that we could watch, and we know within this time frame, it's most likely to go to these areas. And that's going to give us ultimately more chances of success. So, what are these important trading times and the high traffic times? For high volume trading sessions, we have New York, and that's going to be 8 a.m. to 5 p.m. Eastern. And then we have London, that's 3 a.m. to 11 a.m. Eastern. And then we have what we call the liquidity session. That's going to be our Tokyo session. That's usually around 7 p.m. to 4 a.m. Sometimes the range bleeds a little bit before or after, but we'll dive into it in the charts and it'll make more sense. So these are key areas, and specifically I trade this session and use these as references of where price is and helps me identify where price could possibly go. So now these kill zones are the times when I find my setups to actually trade in. So 8 a.m. to 11. And then the silver bullet specifically that ICT talks about is 10 to 11. So most of my trades fall within this time frame. Sometimes a little bit before, sometimes a little bit after, but most of my trading is done within this hour. Now I'm at the charts before that, marking my zones, getting my analysis done, and where I think price is going to go. But most of my actual trades where I enter takes place between this 10 and 11 a.m. Now they do have a PM one. I don't really trade the PM session just because I'm busy with my day, or I'm making these videos or planning videos, all that stuff. So I like to get my trading done in the morning, and then I can focus on other stuff of the business the rest of the day. So whatever suits you in your lifestyle, stick with it and just learn that section of time the best you can with your testing, forward testing, and all that stuff. So if you are on the London side, the kill zone is 2 to 5 a.m. And there's a silver bullet, but I don't have it. So if you just search ICT and look for the silver bullet timeframes in London, you can find them. So let's go into the charts. I'm going to add an indicator on here. I have my indicator here, which we could get you if you want to message me. We could get you this one. And what it is, let me zoom in like back here. Or we could even do it here. I don't know. Whatever. Doesn't really matter about price. So this green section is London. Let me do a day where price kind of moves so you can kind of see. All right, so we have the green, which is our London zone. This yellow section is a no trade zone, caution. So if your setup doesn't happen here in this green zone, I likely would not trade this. I mean, I'm sleeping anyways. But you can see price did go into where we got into the New York Open. So if your setup was here, you would have took a nice trade all the way to New York. But for me, it's the silver bullet where I focus, and I'm on 5 to 1 minute time frame, so it doesn't look like much here. But I was able to get trades and then take out this high through the setups down here on the lower time frames. We have the open, we have the kill zone in the dark blue, and then we still have the AM session, and then it goes into lunch. So again, this is kind of a don't find a setup, but if you're already in a trade, let it go. And then we go into the PM open. So basically after lunch, this is the silver bullet zone right here, the dark blue. And then we finish out the day in the rest of this light blue section. So like I said, most of my trades are right around this blue box. And I'm already in a trade and I have my zones where I'm either taking out here, letting it ride here or here. Depends on my day, depends on, I don't really let trades run when I'm away from the computer. Like I'll be still in my place walking around, but if I'm out shopping and stuff and I prices is chopping around, I just close the trade, take profits, or I'll just trail the stop loss aggressive. So that way I don't take any big losses, and then get surprised when I go back into my account, right? So if you want this time zone thing, I don't know if it's live. Let me see. Um, it should be live in the store if you search that. Let me change that to 2 and then publish indicator. Okay. Update on chart. So now we're on V2. Let's see if we could go to open editor. Let me search on TradingView real quick, see if it's public. That way you guys could just add it to your charts. And there's a lot, so you can see like there's a ICT kill zone. So maybe you want to check this out. And that way you could kind of toggle it on and off. Let me show you real quick. I do have that on here. I think that one's a little different, but basically I have these on here just to toggle on and off. So I could see that New York kill zone. So that's that AM session. Like I said, I trade the silver bullet. And then you can get the range too. So if that's the kill zone range, I look for, the pullback into some of these areas, and then I could take it up into where I thought the trade was going to go. But I don't have them on all the time. I just turn them on real quick to see and then turn them back off. So let's go and search, see if it comes up. Okay, so I do remember I made it private and it was for my mentorship, but I decided not to do the Discord mentorship and actually make it public through these YouTube video series. But the indicator is still private, so I'm gonna share the link. It'll be down probably the pinned comment or in the description if you want to add in this time indicator to your chart. Again, it's mostly focused on New York trading. So you could reference key zones in London. And if you are in London, at least you'll know the area to trade and when to be cautious. But this was really built around me focusing on New York session. So let's go back into the charts. And let's just take a look at these areas, right? So London Open ran all the way up into New York silver bullet area. Find an entry, take it down into here or into these fair value gaps. And guess what? we did, right? Again, London Open, took out liquidity, and then dropped down into New York Open. Silver bullet, could have taken a trade up into this fair value gap, or known that that was going to be a pullback and then take it down into here. So let me turn on a sessions indicator and we could go into it a little more in depth. Okay. So here is a sessions one. Kind of lines up. So you can see where they overlap. There's London and New York. And then the Asian session. So Tokyo, Australia, stuff like that. What we want to do now is look up. So for this light blue area, I'm going to mark up the box, right? And look, price went below it. New York Open went up. Still, this on this day, I'm gonna be honest, you could have been faked out right here and thought, um, like you thought it could. This would have been the liquidity taken out, and you were taking it back down just to go the other way. Let's do the next day. Okay. Oh, right there. So we have this box now. Let's delete this one so you don't get confused. Price again, poked around, and then into the New York. You could see right in that silver bullet, we kind of hit our lowest low. And if we zoom out, our overall bias is bullish because we never really made a new lower low, and we're just doing higher highs and higher lows. So we could have found a reversal into here and take out a high like this on a 5 to 1 minute time frame. It'll make much more sense. And then let's do this one. Okay. Right into New York Open, took out the bottom, and then rocketed to the other side and then back down. So I'm not saying this range is like a perfect, once it goes one way, trade it to the other side, although that's what it did do twice and then another time, right? You want to reference this zone and really just see how price reacts here. And you can see it was just going back and forth. So you have this area. If you knew you broke out on this side, well, are we going to have a pullback and continue? Or are we going to go through it, pullback, continue, pullback, continue, right? So you need to be aware of how price is going to react, plus your overall bias of the higher time frame, zones on the higher time frame you're going to be going to, and all of this will help you understand exactly what price is doing. So if we zoom out, again, we're trending up. So more than likely, unless we're anticipating a pullback of this leg right here, we're going to be using this range to take longs. Now, once we saw that it went under, we know, okay, we're probably in a pullback. Let's measure out that leg. And guess what? 50%. We had that pullback down to the 75 even. And you could see once we went under 50, price really chopped around, took out some liquidity one last time, made people think we're going to sell off below here. And then guess what? We went back up. So now, with this in mind, knowing what the previous day went, this makes sense of running up. You wouldn't want to take out this low, right? So now when we put in that new block that we drew earlier, we know price is going down below here, right? And we're trying to go up, possibly take out this high. So Go down to the silver bullet right in here. I'm looking at price going down. I'm waiting for that reversal in that silver bullet because I want to take out this high, or I want to take out this high, right? Let me try to go to the 5 minute, see if it'll let us. All right, so now we're in on 5 minute. Look at, went down, left fair value gap. Now it did not get filled, so what you could have done is marked out this inverse. Doesn't get filled, right? Just breaks through. But this right here, so we made a low, up, and a lower low. So these two up candles are our breaker, basically our block. And now you have an opportunity to take a trade. Wouldn't have entered here. I would have been waiting for the fair value gap. Wouldn't have entered here again. I would have been waiting for the fair value gap. Once that body closed, I would have just put an order right at the top. Marked off this fair value gap. And then there's really no doesn't get the high for the day, and I trade 5 handles, so for me I would need to go to a lower time frame. But 5 handles would be bang. Literally, I go 5 to 10, so let's say we maxed it out here. My target would have been 14, but I would have hit 14 on this because of the way the candles went, but usually 10. I'm not much more greedy than 10. That gives me a 2 on the risk to reward ratio, and that's all I want to make my edge play out. So a winning trade right there would have been very quick. 10 minutes, 15 minutes, boom, got my money, and I'm out. Say I did get taken out and it was this fair value gap that was the play, I would have just re-entered down here, lower risk, and then same thing. But never got filled there. So that was a little bonus. I just kind of want to walk you through how I use this. And the last thing is just eyeballing real quick. Look at the green section right here. It looks like that was the top and it ran down, right? Looks like that was the bottom, ran up. Now this one, because we were looking for that reversal down on the pullback, doesn't really follow that. Had that, went down, went up, took out liquidity, and then shot down, right? So that's an important part of knowing where you are in the leg, right? Okay. Green, low, shot up. Green, low, shot up. Green, low, chopped around. And guess what? Usually when it chops around like this between the sessions, that's usually the setup. That's before the setup, and it goes the other way. Green, kind of chopped around. So this whole section, we had a couple days of chopping around before we continued back up. Green, low, shot up, chopped around, and guess what? Started going through our little consolidation, chop back and forth. Green, chop, and then we took off. Low, up, chop. High, down, high-ish, down, high-ish, down, chop, 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 chop. But it was kind of like the high-ish, chop, chop, went down. So you kind of see just doing this, I suggest you do exactly what I do, and you could kind of see the flow of the markets, right? Start to understand everything's not perfect, but on the days it does play out, it runs, right? So look, low, kind of chopped around, took off. This one high, shot down, probably into that open silver bullet area, and guess what? Shot the other way. So that's how you're going to start pairing all these together and start to understand the flow of the market and help you kind of feel comfortable with price. So when you do find your setup, you're ready to rock and you're not kind of second guessing yourself. You're like, okay, we're in this range. It pulled back 50% or we're on our way. We have these PD arrays on the 4 hour daily chart. We know we're kind of going there. So when price pulls back, we know it's a pullback, and we're going to look for an entry here on a lower time frame within the New York session, specifically in the kill zone. If you're trading like me, to take it to this high or the session high, or if the PD array is close, we're going to take it up to that PD array. And then being okay with enough, because nothing plays out 100%. Like I was telling you, that setup we had was 14 handles, could have been more. I would have been out by 10. Like, that's enough money for me. I'm not here trying to swing for home runs, because when I used to trade that way, I used to always get stopped out because it would never go to my home run line, and then boom, hit my stop loss. And then maybe it went, or maybe it didn't, and I was wrong. So for me, I'm taking partials at 5 handles because that's a 1-to-1, and then I'm gonna go to 10. And if I do have like 3 contracts, I will let that third one run and pull that stop loss all the way to 5 handles. So if I do get stopped out, I'm still making 5 handle profit off of that last contract. That's the only way I let runners run these days. I collect my money, collect my paycheck, 5, 10 handles, and then we'll reassess if I have an extra contract to let it run. So that's my strategy. We'll go deeper into all that in the future weeks, but specifically this week, I want you to focus on time frames of the sessions, as well as, if you want to add this, again, the link will be down below. Add this so you could see the silver bullets and those yellow zones where just cautious, don't find a setup there. But if you're in a trade, just let the trade play out. So I hope you learned a lot in week 8. Start compiling everything you learned in the previous weeks. Go back if you need to go back and be refreshed. Get in the habit of these exercises so you can learn the flow of the markets and be comfortable with trading. So subscribe if you haven't already. Click that thumbs up, and we'll see you next week on Friday for week 9.